Zambia has received official financing assurances from the credit committee that has been negotiating under the G20 framework. This puts them closer to getting an IMF board approval, one which would be absolutely necessary and key for Zambia to get back onto a fiscal prudent path. Part of these agreements will also further unlock liquidity within the Zambian market. Over the past few years, we've seen how this has been constrained, given not only a currency that has depreciated, but also in general, a lack of liquidity across the broader market. Joining me today is none other than Chileshe Moono, and he's going to be chatting to us about the different impacts of liquidity in the Zambian market. Chileshe, welcome. We're well aware that Zambia entered the COVID-19 pandemic crisis already on a weak footing. We had noticed a great degree of fiscal distress, and this translated into the financial markets. More importantly, for our discussion today, we saw FX depreciate pre-pandemic and continue during the pandemic at quite an exaggerated pace relative to other EM markets. Maybe you can talk to us a little bit more as to what was actually going on. Why did the kwacha weaken to the extent that it did? And why potentially have we seen it strengthen, but still at a time where liquidity is quite tight?
Thanks, Dan. So it's really two things, right? You have the deteriorating macroeconomic fundamentals, and then this obviously translates into the financial markets. So because of that increase in debt to GDP ratio, we had a significant increase in terms of government demand for FX on the market. Now, this increased demand was not matched by supply within the market. So then because you have this disparity, it then introduced a new phenomenon, which was reduced liquidity on the market. So you actually had a challenge sourcing hard currency to service customers. After, as you've rightly mentioned, post-election, we did see some improvement in terms of sentiment. And so that sorted out the one leg, which is confidence in the financial market system. So yes, on the macros, there's still a lot of runway and work that needs to be done. But at least with the improved sentiment, we're starting to see more and more FX coming into the market. And that has sort of helped to manage the situation when it comes to liquidity.
Chileshe, that's a very, very good color. But we also know that there was an update with respect to the mining tax. And from what we gathered, there was a significant impact on the market from a liquidity perspective. Secondly, we also noticed that, to your point, the lack of confidence had meant that there was excessive capital outflows for quite some time in the Zambian market. Maybe you can talk us through these 2 points. Tell us what they mean for liquidity and how you're seeing it.
So with regards to the mining tax regime, what essentially happened is that the government introduced a new policy which required the mining houses to pay part of their taxes directly to the central bank in hard currency. So initially, what that resulted into is a significant reduction of FX on the market because the foreign reserves for the central bank were pretty low at the time. They were ranging around $1.7 billion, which was significantly below the required threshold, which is a 3-month import cover.
Yes.
Yeah, at the time that translated to just over a 1-month import cover.
And this was, of course, in 2020.
That's right. So then with that disparity, and also given the fact that the government itself required a lot of hard currency, there was very little of those flows that would initially flow directly into the market, coming back into the market from the central bank. Again, post-election, this policy is still in effect, but what we're starting to see is more flows from the central bank into the market. So there's a sort of a change in terms of the mechanism, because we're still seeing those flows come into the market, except they're going through the central bank, then come back into the market. Yeah, so that has moderated the FX situation within the economy. With regards to foreign portfolio flows, as you've aptly stated, we have seen an increase, again, post-election, reduced political distress and political risk within the economy, and also aided by the conversations with the IMF, which we're seeing getting closer and closer to a final approval. So that's given international markets more confidence into the economy. So we're starting to see those flows increase into the market.
So Chileshe, like you've aptly stated, confidence has resumed into the market. The timing of the IMF deal as we know, at least the board approval will be quite critical. But we know with financial markets that there are always risks. This is something that we bake in. In your view, what are some of the key risks still, at least in the near term, that would impact liquidity in Zambia?
From a financial market perspective, even though we have seen an increase in terms of foreign portfolio flows, there is a risk given what's happening globally, right? A rise in interest rates in America and Europe, that obviously creates pressure for emerging markets such as Zambia. So that's one of the risks. The second one is what we're seeing when it comes to the reserve position of the central bank. Granted, it has increased. We're currently at just over $3 billion. But with economic activity resuming, what we're now starting to see is even the import bill as activity increases. And also, while certain key commodities go up in terms of pricing, what we're starting to see is the headroom of reserves versus import cover is actually coming down slightly.
So you're making reference to the fact that, of course, we're in a period where the geopolitical tension has led to a much higher import bill for Zambia, right, which a lot of people don't consider. And on that fuel side, it will, of course, have an impact on the market and the amount of dollars that are available. Yes.
Exactly. Yeah, so with less headroom, obviously, then the central bank has got less room in which to support the market. Yes. And that support has been quite critical in terms of liquidity. So that's another thing that we'll need to look out for. Thirdly, it's the issue around the mineral royalty taxes. This has been a good source of FX flowing into the central bank. This was obviously supported by the fact that copper prices were quite high in the past year. So that supported inflows. But with copper losing part of its value this year, we know that prices are down about 25% so far. That obviously impacts the inflows into the central bank and their ability then to support the market.